Sign up today.
The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good afternoon, folks. Welcome to the July 8th, a wonderful Wednesday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Hey, let's make sure we have an extraordinary one. And the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check out the circumstances of these markets. We're going to go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here. But much more important than that, during this next 60 minutes, I'm here to serve you. So feel free to pick up that phone. We'd love to hear from you. Dial on in 877-927-6648. If you can't dial in, no problem. I've got you covered there. Go ahead, send me an email, steve@tfnn.com. Inside the subject heading, please put radio show question, and in our Tiger's Den, well, any ping will do. So let's go ahead and get this show started on a wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got all the indices. Well, not all the indices in the green. The transports are in the red. They're down 19 points. The Dow's up 45. The S&P 11. NASDAQ 107. The Russell just slightly green, up 1 point. Semis 18 points. Gold's up 13, silver 34 pennies, light sweet crude 36 cents. Leading the charge, the upside today. It's Amazon, dollar-wise, $55. That's nearly 2%. Alibaba's up $20, 8%. Google is up 17. Biogen, a nice move there, 5% up 14. To the downside, Grainger Worldwide, GWW down nearly 4% or $12. Booking Holdings off 9, about 0.5%. Sherwin-Williams painting the town red off 7.50, 1.25%. Lemonade down 7 buckaroonies out there. Nothing like a good lemonade. Some of you might like to put some adult beverages or inside mixes inside that lemonade. Nothing like a nice ice cold. Now, if you ever had this, I haven't had this for years out there, but as a kind of a young adult growing up, we used to go get that, it has to be the pink version, in the frozen aisle, that Minute Maid pink lemonade. I don't even know if they still make it out there. I'll have to check. But you mix that up, and then you put in, well, as much vodka as you can stand out there. And, boy, what a great summer drink that is. That'll take care of that coronavirus. All right, so let's get to the markets out here. What are they doing? What are the markets doing? What are we going to pay attention to? What's going on? Let's tell you, the NQ still is the lead dog out here, and still what we should be paying attention to or focusing on the most. If we take a look at, or the NDX 100, if we take a look at the move lower, and this is really important here, folks. So I have no idea what people are doing into the day. I can only imagine that the market started to sell off, and that got the juices of the bears just flowing out there. And maybe as price got down in the 10.530, the 10.520 area, somebody might have gone short then, saying, this is it. I don't want you to do that. Instead, what I want you to do is you don't have to trade the futures. You don't have to trade the futures. But boy, if you are listening to the show and you're trying to learn pattern recognition tools to help you understand what the market is communicating to you, then make sure that you've got access to them. And then make sure that what you're doing is you're taking a look at just the simplest thing of all is just take a look at the opening ranges. Just look at 3 opening ranges: the U.S. opening range, the Asian opening range, and the European opening range out there. And that's the first half hour of their cash, not their cash. Well, in the case of Europe and in China, I'm looking at the cash market open. In the U.S., it's when the futures, the U.S. 6 to 6:30. And that's represented by the black diagonal. So the black horizontal lines on my screen, solid lines. You're going to see black, blue, and red out there. Black is USA, red is China, blue is Europe. You're going to see some dashed lines. Those dashed lines are the TD9 resistance and support level. So sorry for making the chart a little quite decorative out here, but it helps me to understand and to be able to communicate to you what's taking place inside the market. So as the market was pushing lower this morning, the NQ, the time was about this half-hour chart. So when was it? 10:30, 11 o'clock? 11:30 out here. It was just doing nothing more than testing that support level of that opening range at the 10,523. Now, the NQ is above all opening ranges right now, so it may be targeting its TD9 breakdown level of 10,665. But even though the NQ is the one that is leading the charge here, it still needs the assistance of its other three partners out there. And that's a potential problem here. As we take a look at the ES Mini, the ES Mini, on the other hand, has made it up towards the European opening range, which is 3140. Well, the high of that opening range was 3148. The high of the Asian opening range, 3149 out there. So price made it up there. It hasn't given us that all clear signal that, quite frankly, the NQ needs in order to make that move up to that TD9 count breakdown level. So you're going to want to watch the price level of 3149.75. Now, that may be very difficult for the ES to do, at least at this time at 1:12 in the afternoon. And you must be saying to yourself, Steve, is that a crystal ball you're reading into to be able to make that kind of comment? Good question out there. The answer is no, it's not a crystal ball. But what it is, it's really just understanding our TAS market profiles. And so when we take a look at our TAS market profiles with regard to the speed dials up here, we can take a look at what's going on in a 60-minute hourly, a 240-minute, 4-hour, the daily, and the weekly out here. You'll see that the 60 and the 240, they're in the red zone. So that says that we have more stocks trading below the bottom of their profiles versus trading above the top of their profiles. On the daily basis right now, you've got 145 trading above, 154 below. So what you've got out here is you've got negative market breadth, making it more difficult for the ES Mini to clear the levels that we were just looking at, basically the 3149.75. Not impossible to do, just difficult to do. Whereas if we take a look at the NQ out here, you can see that they're saying, what are you talking about? Bearish crossover. Not a single one here. Not on the 60-minute, the 240, the daily, or the weekly. So now the only thing you and I can do, well, we can do many things, but one of the things we can also do is we go down to my short-term time frame, my 30-minute time frame out here, just to get a real feel. Now, in the 30-minute time frame for the S&P 500, we actually have a bullish crossover. You've got 100. Nah, that's not true. That's not true. So even though visually that's what it says, that's not true. So we're just going to skip this. I don't know why it's not syncing up right now, but I'll reboot it. I'll reboot it after, and we'll come back to it. So we'll just refer back to my prior comment out there at 60-minute, 240, and in the daily inside the S&P 500, making it tough for it to cross and trade above the 3149.75 level out there. So that's what you're going to want to pay attention to during the day today. Just really kind of that simple. So we get back from this break. Let's go to our questions, see which ones have come in. Looks like we've got 2 questions. One from Steve W., the other from Johnny D. And, of course, I want to hear from you. 877-927-6648. Steve Rhodes with TFNN. We'll be right back.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So the first question coming in from Steve W. reads like this. Could you please talk more about your theories of international capital flows in relationship to the two tables you shared on yesterday's show? What would they look like if the rally was not just a counter-trend bounce? Would a lot of money be concentrated in the USA? If the percentages are small, then where is the capital currently? Is it on the sidelines? I heard that Europeans are hoarding U.S. dollars. Would love to hear your talk. Would love to hear you take more on the subject. And Mr. Bill was right in the den, was asking about whether I've done much in the way of study on Dow theory in correlation to the transports out there. And I'd mentioned him that I hadn't, but his question about theory was really bleeding into this question here from Steve W. So let's take a look at. And capital flows is really is the most fundamental issue for each of us to understand out there. There's nothing more important than understanding worldwide capital flows and trying to understand these markets out there. So how do we do that? Well, first of all, and why is that important? So the why is that important? Well, so first, let me get to the charts that I had shown yesterday. So this is one of the charts that I showed yesterday. Steve and everybody else that is out there. Now, this is it's a table, not a chart. And this table here in the upper left-hand corner, you'll see everything in the comment section tells you what we're looking at. So you start from upper left, you've got the Dow equity futures contract, just priced in U.S. dollars. Below that is the Dow in euros. Below that, the Dow in yen and the Dow in pounds. So this takes us back 45 quarters. 45 quarters ago was March of 2009. And then you've got the next column, you've got rate of change. Don't worry about the last out here because that's what it's trading at right now, but just simply the rate of change. The rate of change, the percentage rate of change out here. So the Dow since the March 2009 bottom is up 329% priced in dollars. But our folks, our friends across the ponds out here, so if we go across the Atlantic and we take a look at the Dow priced in pounds, 461%. They're really loving the U.S. market, Steve. Totally loving. They're outperforming you in their local currency. Take a look at the Dow priced in euros. That's up 431%, well above the 329% we're looking at as far as terms of Dow priced in U.S. dollars. And the folks over in Japan, as we go across the Pacific out here, well, they're up 376%. Now, each of the instruments that we are looking at here represent the exact same 45 quarters. So here we're taking a look at large global markets. You've got the DAX staying on the left-hand side. So we're taking a look at Germany. We're taking a look at the UK. So the same DAX priced in dollars, US dollars, only up 159% versus 329 in the US markets. Global flow of capital concentrating here in the U.S. for the last 45 quarters versus anywhere else. Whether it's the DAX in Germany, the FTSE in the UK, the Shanghai over in China, whether it's gold's only up 64% in that same time period. T-bonds, 116%. If you can take a look at the currency pairs just below that, nothing there substantial. If you take a look at the Nikkei in Japan, now we're over on the right-hand side, up 125% versus a 320 in the Dow out here. So again, the Hang Seng, 42%. Emerging markets, 34%. West Texas Intermediate is down 67%. So you can see the global flow of capital here. It just stands out at you. It is not even a question mark. Understanding the global concentration of capital. Where is capital concentrating itself, Steve? So that was one of the tables. Now, many people can take a look at a table like this and totally get it. Others are just simply more visual. And so here's the visual piece of it. This here, so if we, and I'm going to start here on this set of charts. I think I'm going to start from the right to the left. I don't know why, I just feel like that. What we're going to talk about here, Steve, what we're going to talk about here, everyone else, is what people called the 2000 tech bubble out there. All right, and everybody, the internet bubble. Everybody is thinking that it was, this bubble was just led because of all of these .com stocks out there. So not really the tech bubble, the .com bubble out there. But what really led up to that? Was it really a bunch of foolish traders that were just saying, hey, anything with a .com, I'm going to invest with it, and it's just simply going to go shooting to the moon? No, that wasn't it. I know that that's the BS that has been told to people for years. It's all before Steve shared with you this charts out here. It's so important to understand. Currency is nothing more than a commodity, but it's the most not valuable. It's the most important commodity for you and I to take a look at, because we price everything that we trade, buy, at a store. So here, if we really take a look at what was going on in 2000, it was an absolute exodus out of the euro. It began in March of 1995 out here. Here's the high that you're taking a look at. The euro, we didn't know it necessarily on March of 1995, but what we can do afterwards is take a look at it. And you can see that there was absolutely a no confidence vote. These are monthly charts that we're looking at, folks out here. And the euro went from $1.45 down to 82 cents out there. I know math expert out here, but I'm pretty good at math. That's a substantial percentage to the downside, 40, 45, 50%, whatever that actually equates to out there. No confidence in the euro. Where was the confidence? If it wasn't going to the euro, where was it going? Well, the chart next to it on the left, again, beginning in this case here, I'll begin with the low of April of 1995. The confidence was in the U.S. dollar. So you had the U.S. dollar index moving higher. Now, there's a lot of folks out there. I hear it on the air all the time. And when I hear it, it just makes me want to just reach my hand through and grab that person by the neck and say, let me show you this set of charts. Because what you just said doesn't make any sense. In fact, you're giving out false information out here. Because there's a lot of folks that will say, if the U.S. dollar index is going up, there's no way the U.S. stock markets are going to go up. Have you ever heard that out there? Foolish full. You know what it is? It's people that really don't spend any time taking a look at history. And history is no mystery. It's right there in front of us. The future is the mystery, not the history. So we have the global flow of capital. We have capital outflows getting the Sam heck out of the euro, going into the U.S. dollar. Then you've got your Dow charts to the left. Oh, I've got the ES mini charts out here. So I've got the ES mini charts. I don't know I've got the ES mini, but I do out here for this set of charts. And you can see that the ES mini was moving higher from 1990. Well, here because of when it started, 1997, but moving higher up into that 2000 dot-com. Was it a dot-com bubble? BS. It was all driven by capital flows out there. The dot-com just happened to be around. That's all. And this is what, and you can see that the Dow, or the S&P in this case here, moving higher in terms of dollars, moving higher in terms of euros. It just becomes super clear with regard to what the markets are doing when we take a look at this global flow of capital. By the way, I've even heard people say that the U.S. dollar is in a bear market. That is about as laughable as anything that I've seen. Here's the bigger picture of the euro right now. Look at the long-term descending trend channel since 2009 out here. Any bounce we're getting is just a bounce inside a longer-term downtrend channel. If we put the U.S. dollar index out here real quickly before we go to the break, here's their rising price trend channel. We'll be right back. Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as,
whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us. And Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab. Bam!
If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at global capital flows because this is really important to understand. And so I was on my way back from my workout this morning. I work out a couple times a day. And I think I don't know if it was Bloomberg or CNBC, but literally someone was talking about how the U.S. dollar is in a bear market out there. And I just blew a gasket. It was, what do you mean? The U.S. dollar index bottomed in 2008. It's been in a steady rising price channel ever since then. I mean, it really got going in 2010 to the upside. And to the best of my knowledge, whether we choose 2008 or 2010 out here, doesn't matter. Has the U.S. stock markets been going higher since then or lower? So the next time somebody tells you that if the U.S. dollar index is going higher, that the U.S. stock markets cannot go higher, and I realize that in this day and age, there's a lot of medical marijuana, or you can use it in some states, just for the heck of it. They must be smoking some type of hallucinogenic pot out there, because the charts don't tell us that. They tell us the exact opposite. They tell us the exact opposite out here. If somebody tells you that, tell them they need to change their prescription. Okay, because they must be doing Quaaludes or something like that out there in order to be able to make that kind of a comment. You just want to blow your brains out when you hear stuff like that. And the reason is very few people actually spend the time, do the work, go back to the charts, do correlations, and try to really figure out what's going on. You just assume that the individual that is being interviewed on CNBC or Bloomberg or something like that has got the credentials to be able to make statements that have validity to them, right? They're supposedly, these guys or gals are experts out there. I do not know what they are smoking to be able to say and you hear it often. You don't hear it occasionally. You hear it often. Okay, so let's get back to this global flow of capital out here. I would go to, what would I go to next? So here's another visual. So here, this just happens to be the Dow. And it's just priced in either dollars, Great British pound, euros, yen out here. And again, this helps us to understand. It's not as easy to take a look at the tables and understand the percentages, but this just represents what we looked at on those percentage tables out here. The Dow in dollars is in blue, in red it's in pounds, in yellow it's in euros, and in purple it is in yen out here. So this is helpful. Now, let's fast forward to the March of 2020 lows out there. So we know what it looked like. We know what it does look like going back into March of 2009. But here are 16 weeks now into the March 2020 lows. And is there, if I were to ask you right now to pick out where is the concentration of capital in all the markets, which market, basically, let me ask it like this. Which market is performing best in all currencies out here? And the answer you would come back to me with, you'd say, well, that's easy, Steve. It's Germany. Because it's up 52% in that same time period, priced in dollars, 43% in euros, 47% in yen, 40% in terms of in pounds. No one else is even, no one else is really near that. Percentage-wise, back pretty substantially. So that do you really believe? Now, all we have to really do is go take a look at the international markets. So where is that next set of charts out here? Probably this one. Is it this one? Yeah. So here you get to take a look at using the ETFs, and I specifically did this in the ETF so that each of you can do this at home. It's so important to understand this perspective out here because I could try to answer and say, yeah, it's Germany. Right? That's where the global flow of capital is. But when we take a look at the German ETF out here, EWG, to get an appreciation for their market, what we're going to see out here is the German market topped in 2018. January 2018. It's been in a descending trend ever since then. The global flow of capital is not going into Germany. This is just capital. This is just counter trend stuff that is going on out here. There is no concentration of capital yet that I see. Those ETFs priced in U.S. dollars. Yes, all those ETF stuffy are priced in U.S. dollars, and that is referring to this chart right here. no easy way for me to take each of these and price them in multiple currencies. If I did that, it would be a chart that looks something like this, which looks like, pretty nice spaghetti, so to speak, but it helps to prove its point. So, Steve, I hope that helps you out with regard. So your question was, where's the capital going right now? It's just being dispersed amongst all of these areas out here. So what we're likely to see, what I believe we're still going to see, this really feeds into the next question, which came in from Johnny D. And Johnny's question is your read on the S&P and Dow that this is still a counter-trend rally off the March lows and that we should revisit or possibly break the March lows? And the answer is yes, sort of. So when I say yes, sort of, what I really mean, I'm going to come back to, where am I coming back to? Right here, this set of charts here. And we took a look at this during the 1 p.m. update. And this is also very important to understand. And it's very simple to do. And again, I'm just using the ETFs here. And all I've designated on this chart here, Johnny, is the high and low for 2019. It's so important because if markets are breaking out in 2020, any market that breaks out, one of the most important things that you do when you end the year and you're taking a look at next year is where is price trading, because any market that's breaking out trades above the prior year's high out here. And all you have to do is go back, take a look at a yearly chart. This is a yearly chart here for the Dow, and you will see what I mean. It's just visual. It's just easy. You don't have to be any kind of super technologist to really figure this stuff out. So in this case here, now I believe the S&P 500, I know the S&P 500 is stronger than the Dow or the Russell 2000. The Dow over in the left-hand side, upper left-hand side, the Russell 2000, lower right out there. So those are the two that are going to be most easily to get back to those March lows. Will the S&P get back there? I don't know just yet. We'll just simply have to watch this stuff one day at a time. So yes, the only market that is broken out is the NASDAQ. Yesterday we talked about the creative wave of destruction that is out here. And that's why we've got many of these winners inside the NASDAQ. Now, when I say many of the winners out here, I've got another table. I think I can find it. I know I can find it. I just got to spend the time to get back there. Was it this new page? Let me see if it's this one. No, it's not that one. Is it this one? No, it wasn't that one. Was it this one? Yeah, it's this one. So this here is actually the performance. Shoot, I can't do it off of this chart. Over on the right-hand side here, it's the beginning price for the year for each of these equities out here. So what I do is I dump all this data and then put it into a spreadsheet to figure out who's the big winners inside the NASDAQ 100. Now, look, that's really important to do out here. Assuming that we do get this pullback, you really want to be able to clearly articulate who the winners have been inside of the NASDAQ out there, and then take a look at how they have performed on the way down. And if their retracement is fairly narrow, that's where you want to be able to allocate some funds into individual stocks, because the NASDAQ is going to be the winner, chicken dinner. Perhaps for years to come. But let's just take things one step at a time, one day at a time. Steve Rhodes with TFNN. We'll get off of this soapbox, but it's an important soapbox. And we'll just, no other questions that have come in. We'll just go take a look at the general markets unless we get some calls or questions. This happens to be a chart for wheat. Very nice day today, huh? Trying to take out a descending trend line. We'll be right back.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're going to go out to Michigan and speak with Gary. Gary, thanks for calling. Thanks for holding. How are you doing today?
Good, Steve-O. How are you doing?
Very good. Thanks so much for asking. And so
Okay.
So you want to take a look at precious metals, gold, silver. Tell me what you want me to take a look at first with you.
Well, your opinion, has gold really broken out now? And is it headed how far topside? And is silver, it's kind of dragging along, still doing okay, but has it really broken out, or is it still in that range? And if gold really did break out?
So sure. So with regard to gold breaking out, and I love the question because it really feeds into the first half hour of the show where we're really taking a look at global capital flows. And that applies to every instrument. So it most certainly applies to gold as well. So when we take a look at gold priced in U.S. dollars, we're going to see a breakout of its consolidation pattern. When we take a look at gold expressed in euros and pounds right now, they haven't taken out some resistance points. When those resistance points get taken out, that will then go ahead and confirm the breakout that we see in terms of the consolidation pattern priced in dollars. Does that make sense, what I just said to you?
Oh, it totally ties into what you were talking about earlier.
Okay, so now gold expressed in yen is already trading, and I think it's at a new all-time high today. And I'd have to go back to the monthly charts, but gold priced in yen is confirming the message of gold priced in U.S. dollars. Folks that are watching, I can tell you on your cell phone, they can see that today's move higher of gold in pound sterling ran right into resistance, the top of a descending trend line. And that's priced, Gary, gold priced in pounds about 1,452, 1,453 pounds. So if gold can get above that, that will then go confirm what we looked at, or what we're going to look at as far as the consolidation in terms of dollars. And in euros, you're really looking for price to clear about $1,636 out there. If those conditions are met, then the breakout, and the breakout that we're referring to is this consolidation out here. So here's the consolidation. We can see that price is above the consolidation. It's above Stevie's green line out here. It's in bar number 6, and that says, okay, we know that if it does get to bar number 9, that forms an 8 or 9 to the bar following 9 is a high, that could be a a turning point or a turning point to just pull back to test support. The actual price objective of this consolidation, when you break a consolidation, the price objective is what we refer to as a measured move. A measured move says take what that consolidation pattern is and just add that to the top or the bottom of the consolidation. So that would get us into about the 1908 area. So if we only looked at it in terms of dollars, we would answer your question and say, yes, gold has definitely broken out. And the majority of technicians out there will only take a look at gold price in U.S. dollars. And if you do that, you're trading with both hands tied behind your back. I don't like to do that. So that's what I see with regard to the price objective out there for gold. Any other questions? And now gold, even though it does look like it's breaking out, if we can get the confirmation in the other currencies out here, it doesn't mean there's not some pit stops ahead. So, for example, gold ran into, in terms of dollars, ran into resistance as well, which is its horizontal trading range. That is priced at 1829.80. So price in dollars, that's the next level that you want to see gold close above on a weekly basis to then give you that forecast, that projection of 1897. That would be its next weekly resistance level. And then above 1897, that would take us to 1964. So it's really kind of like one step at a time. But the next step, so priced in dollars and yen, it's looking like the answer is yes. And if you can get the gold priced in euros and pounds out there to follow through, that's what gets us into that 1900-ish range, maybe even 1964. Okay?
Great. And how does silver tie into all that?
So in the case of silver, I don't have the chart out here for silver price in all of the currencies. We could do that, but I won't do that right now because gold will be the leader out here. But we can take a look at silver and see how it's trading. Here are all of its futures contracts. And right now, silver is trading above, in essence, its horizontal or its double top, its triple top trend line out there. And that's at about 1884. You trade at 1914 right now. So if, in fact, silver is able to close above, I'm sorry, let me give you the right number out here. I don't think that was it. It was 1912. I knew that wasn't right. I couldn't stop my mouth. It was moving too fast. So 1912 is a number. We're at 1914. We're 2 pennies above that. So that's looking like a possible break as well. Now, on the daily time frame, the only cautionary signs are prices rising, doing it with less relative energy. And Gary, if there's a bearish reversal candle that forms out here, we very likely would see silver make a beeline down to support that had already been tested and rejected. It's the bottom of its bullish structured profile, 1750. Now, just because I've got it's triggered a Rhodes momentum indicator top, it's only triggered it. It's only a caution sign. It also potentially is in wave number 7 or letter G. So there's 2 potential caution signs out here, but not until a bearish reversal candle forms will those caution signs really have any kind of meaning out here. But with regard to generally breaking out, silver is above prior highs out there to suggest that, yeah, it's following along too.
Great, and you'll follow along on that on your daily.
Yes.
I know you do so much in those charts that we get every day with your service. It's awesome. But you'll follow along on that with that breakout because I'm not a technician, so that's
absolutely
a key. So I'll watch for that in the chart.
Yeah, absolutely. And if you go back and take a look at this morning's newsletter, it had a lot of this in essence in there or built into the charts. I'll make sure that I perhaps add more verbiage to it. And then, I'm always throwing in intraday charts at the time that I put together the newsletter for these commodities if they're showing us some type of signal. And in the case of gold this morning, it really wasn't. So I think all I probably put in there was the opening range chart. And that way, the opening range chart for gold really helped. This really helps traders understand what's going on, or most certainly if somebody's an intraday trader, those opening range charts for gold are really, or for any instruments, are very helpful. So, for example, right now I can put over if you give me just a second, I'll pull it over. Here is the opening range chart for gold. And we took a look at the opening range charts for the equity contracts right now. And what I want folks to take a look at, this works for all instruments out here. So it's really helpful. It's a really cool tool. And at 4:30 this morning, we saw gold breaking above all of its opening profiles out here. Between the U.S., the Asian, and the European market, price was trading ever since 6:30 last night, 6:30 last night, just really in a nice little sideways tight range. But once price cleared the opening ranges, that was its message that it was getting ready to take off topside out there. And it's still trading well above the top of the opening range, which is 1808 out there. All right.
Awesome. Thanks, as always. Great job.
You bet. You bet. Thanks for calling. That was Gary in Michigan. Inside the Tiger's Den, S&P wants to take a look at Twitter. So let's throw that chart up on the screen out here. We're about to go to a hard break. And when we come back from this break, here's our 3 time frame charts for TWTR. This is going to show you the profiles, where price is trading in. Oh, boy, it's really decorated, that daily chart. We'll get rid of all those decorations out there. And we'll be back in just a moment.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the market, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
The gold market has taken off topside in a large way in 2020. If you want to take advantage of this sector, now is the time to subscribe to my gold report. The gold report took profits in 4 of its equities in the gold portfolio in the first week of January for a combined profit of 99.2%, with 2 positions left in the portfolio that have a profit of 67.5% as of January 7th. The gold report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the gold report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the gold report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So the question was to take a look at Twitter. And now that we've unpopulated the chart, we can see Twitter, nice day today, trading out at 35.54. Yesterday was a close above the top of its daily profile, second day above that, and price is trying to close above the top of its weekly profile. So S&P, the resistance you've got for the rest of this week is 34.98. Yes, price is trading above it, 35.51, but a close above it this week would suggest that price would rise up to 39.05. 39.05 would be the next profile, and that is coming over. Take a look at the monthly time frame chart. Now let's take a look at Twitter and see if there's any other signals coming from its daily time frame chart out here. And voila, we have one. We have one. That one is 34.95. This is the daily time frame chart. 34.95 was its TD9 count breakdown level. So S&P, as long as price closes above 34.95, that's what you want to see if you are long Twitter. That's based upon its daily time frame chart. When we take a look at the weekly time frame chart out here, we already talked about it trading above the top of its daily profile, but we can see that the most recent high out here, the high that it's dealing with, which was from June the 12th on a weekly basis, was a TD9 count pattern. So what that tells you is on a weekly basis, you need to see a close this week above 36.94 to then tell you that that pattern has failed, that it has cleared resistance. And if it can do that, its message is price would want to move up to the 44.09 level. That's its weekly TD9 count breakdown level. So that's going to be an important thing for you to watch, that price point on a weekly basis. On the monthly chart out here, what do we have in Twitter? I don't have anything else to assist us. When it did top way back in May of 2018, it was a TD9 count pattern. So, folks, you really want to understand the nines out there. It's just a super tool. The opening range, a super tool out there. These are easy things for you to do. Let me teach you. If you don't already know how to do it, just subscribe to Mastering Probability. Even if you only do it for 29 days, that's okay. Just use these tools. Improve your trading. Improve your family's trading, your friends' trading. Most important, have a great day. And stay tuned for 2 more great hours, and I'll see you on Taco Terrific Thirsty Thursday.